Okay, now I believe we're live. I did something wrong there on my end, so let me back up and start over again. There will be lines on these charts because I was already talking about it, but today is Friday, the 8th of April, 2011, and the big story here today, I think, was oil. The fact that we had seen oil clearly in an uptrend here, and what we had seen earlier in the week was a little bit of consolidation above the rising 5-day moving average, and it was yesterday when the market really began to get that upward momentum back, and obviously, we closed right at the highs here at 113.10 on oil, and that's going to be something that a lot of people will remain concerned about, I think, because obviously the effects for the economy. And the other big news here today is the this looming government shutdown. Are they going to save that from happening here in the final hours? And that'll be interesting to see. But as far as the market itself goes, overall the S&P 500 held up really well, I think, when you consider some of the news that's been out there. Another earthquake in Japan, and then we had this government may be shutting down, and the market's been a little bit extended here. Really, what we've been talking about is that the market had been in this nice uptrend above the rising 5-day moving average, and that 5-day moving average held as support on a number of occasions, and then it started to turn sideways in here. This range of 133 to 134 was what was developing, and I tweeted that, or put that on my blog rather, put some charts of that and how it was starting to transition during the course of the week. Today, obviously, the market gapped higher right up into that 134 level, and that's pretty much where the sellers immediately met any demand, and then the market was below that declining volume weighted average price all day, and I just realized I forgot to change my mouse out because all the clicking, but hopefully that's not too loud. Anyways, the S&P 500, we did break a little bit of support in here, and now we're going to see if this support level, so this is the line that we've been drawing as far as this prior resistance holding as support. We broke it, and now we've rallied up here. Now it'll be interesting to see if the market can quickly recover, or whether maybe it rallies up just a little bit more to the 5-day moving average, and we start to see a pattern of lower highs and lower lows emerge next week in the S&P 500. The level that it did come down to was the lows basically from late March there, March 30th, and that's where we did get the bounce from. But still, on a daily basis, we were below the volume weighted average price here, obviously at the end of the day. And for the week, here's where our volume weighted average price ended up in the S&P 500 at about 133.30. So I think that'll be probably a level 133.30ish, 133.40 where the 5-day moving average is. They could potentially offer some resistance, and if it does, then maybe we get a little bit further pullback. I don't think it's going to completely fall apart here. It doesn't really look like that to me. Maybe we get a little profit taking down towards the 20 and the 50-day moving average. If you back it up to the weekly time frame, we're still in a strong uptrend here. We had found support at the rising 10-week and then the 20-week moving average here, and perhaps we're just going to, like I said, digest a little bit of these gains through time. So I don't see a reason for outright bearishness, but obviously the intermediate term would suggest that maybe we're going to get a little bit further selling, and you want to be a little bit more careful about what you're buying, and not chasing stocks and lowering your expectations on the long side for the early part of next week at least. The NASDAQ 100. In here, we've kind of got this. Well, that's not what I wanted to draw. I wanted to draw it like this, which was what we have is possibly setting up here on the daily time frame is this little inverted head and shoulders pattern. Now, I don't really think you have to spend a lot of time looking at that type of pattern. It's just an observation more than anything. But we've got this resistance here, and the market is holding right at the 50-day moving average, really fighting a battle to hold above there for the last 7 or 8 sessions. And if we get a little bit deeper pullback down towards 56 and a quarter, I don't think that would be a horrible thing for this market. We see the same transition in here where we're at these higher highs and higher lows above a rising 5-day moving average. And this market has been really, we've been seeing that it's been getting sold into now 3 days in a row after some early strength. So that's a little bit of reason, and you can see the choppy. It's been very choppy, the Nasdaq has, but it's maybe transitioning intermediate term here to the sellers taking a little bit of control back for a little bit. We'll see if this level gets tested early next week near about 56.40, and then below that, I think that you would look at 55.80ish. So down, in this area right here. Otherwise, I don't think it's time to rush out and be a huge bear. I had mentioned on alphatrends.net yesterday that we were getting this transition, and that I didn't think it would lead to a significant breakdown, but there would probably be opportunity for more aggressive traders to take a look at the short side for at least some trades, and that's what we had in here today. So we had today's breadth was 1,900 decliners, 993 advancers. What I had initially said this morning on Twitter was the semiconductors were really the bigger reason, or what made me cautious early on this morning. And let me just I was already like I said, I started the recording and it didn't work, but anyways, the semiconductors came up to the top end of this range, up at this $35 level, and they were kind of looking like they might. The semiconductors were looking like they might follow the Texas Instruments, which was starting to break out yesterday. And the semiconductors, what we had happen in there was we did get a move past those highs at $35 level and that 50-day moving average, but it was immediately met with some selling. Not immediately, but that first half hour it kind of held above that little resistance, and then as it broke down, the sellers gained control, and that's where it was maybe a half hour into the day. I said, be careful, because these semiconductors had been breaking down and moving to the that breakout had failed. So these are. I'm sorry. So here's what I was trying to bring up was these charts were what I was talking about. That I had posted these, I think, Tuesday through Friday through Thursday, how this market was transitioning, and that the daily time frames were still bullish, but there could be decent short-term trades for aggressive traders if support did break. And again, in these markets, we did see support break, not in the semiconductors. Where the semiconductors are really this group was looking. Sorry for changing back and forth so quickly on those time frames. But earlier this week, the semiconductors looked like they might have the ability to drag the rest of the market down with it. But obviously, we had the Texas Instrument national semiconductor deal, and then we got a bid back into the semiconductors. So I think that early next week, you're going to want to keep an eye on about the 34.50 level, because if that breaks down, then we'll probably go back down and test some of these other levels. And again, I don't look at it as outright bearish. I look at a market that's had a very strong run. Here we've got a pullback that's digested some of those gains price-wise, and now perhaps we're getting just a little bit further time correction, and the Russell 2000, of course, had broken out to multiple year highs, all-time highs actually, and came back in here a little bit. So the Russell 2000, we did see transition here. We had and here's the thing, I get people tweeting me saying, "Hey, everyone was bullish, and I called the top or whatever," and that that's great if that's your game. The game that I'm trying to play here is where's the money coming? Is the money coming in? Is it kind of turning sideways, or is it breaking? And as I always say, when we have these uptrends, what we want to focus on is not necessarily picking the top, but identifying the transition and seeing that, this market started to turn sideways a little bit. We had a little bit of trouble with the 5-day moving average. And then when support was broken, you don't get bullish and you don't get giddy when we have a big move like this. Like I always say, where do we have the potential to go? So if you're looking at it up here and getting bullish, where do we have the potential to go? I had said the other day it's hard to be bearish with the Russell 2000 at all-time highs, and I stand by that. It's time to get near-term bearish if you're a short-term trader when support breaks. That's the correct time to get more cautious, not when we're making new highs, because again, we've been making new highs now for the last several years, and again, these are all-time highs. So if you've been bearish, the Russell 2000, you've only been right for about 3 days, and there's the 3-day volume-weighted average price, and anyways, when support breaks, that means, hey, it's time to look at this market and say, if I'm an aggressive trader, I'll get short in here. Or if I've been long, it's time to take profits, move to the sideline. But the uptrend on the daily time frame is clearly still intact. I think it would be healthy to see a test next week of at least this $83 level where we had broken out from. So as a minimum, I think 83 looks like an obtainable target on the downside next week, and it would be nice to see maybe some digestion of the gains here, more through time than actually through price. Sorry for getting that in the way, but let's see. So where else are we? We've got gold that's silver up at $41 an ounce now, $40.92. Gold at $14.75, and that chart, I don't know what's wrong with my gold chart, but the GLD you can see had broken out and is continuing to follow through to the upside. So big uptrends in these commodities, and there's no reason to think that they're going to break down. If you're long gold, what do you do? Should you be looking for a top? No, you should be looking for levels to protect your long positions with your stops. That's the prudent way to do it. Financials. Let me talk about those for a moment. Was that line on there? Anyway, 1620 had been a prior import number, so maybe we're going to go back down to that. But the financials tried to get above their 50-day moving average, were unable to hold, and got a little bit deeper of a sell-off in there. And I think that where we are is where you would have really probably look to expect to get a little bit of support. I think now if we get a rally up to the declining 5-day moving average and then break lower, then that'll be a little bit more troubling for the financials, and perhaps we would see them down near 1620-ish. But again, I don't see a bearish chart here. I see something that you've got all these moving averages crossing back and forth. It's really just more signs of indecision than outright bearishness. So that's where we are in these markets. We are seeing some stocks that are breaking down and holding on to those losses on a daily time frame, but the uptrends, on the weeklies are still looking like they have room for a bounce. So UAL was a good short this week that we had taken advantage of. Like I said the other day, we had covered it, but there are opportunities on both sides of the market. The little energy stocks, Double Eagle really went yesterday, so Royal started to go in here today, and then you look at these charts, they're speculative little stocks, and they can have these big runs, but they can also fail pretty quickly too. And Royal, for instance, today it broke below that VWAP and then just kind of came unglued there. On Alpha Trends, I have a video that I had recorded in LEI, because LEI is one of these little oil names that gets going really nicely sometimes. It's got this good longer-term chart. But I had narrated the trades I was taking in here, so you can go take a look at that. I don't need to re-explain it. But there's opportunities in a lot of places. I had written that article for SFO magazine about MPEL, MPEL, still looking good. We spoke about that again on Wednesday, because last week we were looking at this little pattern of lower highs and lower lows. It broke that, it went higher. Then we had another pattern of lower highs and lower lows. That was broken. And, the buyers are in control above a rising 5-day moving average. So if you're along a stock like MPEL, worst case stop, I would say down near about $8 a share. But, money management and where you put your stocks, your stops, and that sort of thing is really a personal thing that you have to, consider for yourself. So, Jack, thanks for the retweet. Stock Sage, thank you as well. And Chicago Sean, thanks for the retweet. What else do I have to look at? The dollar's getting hurt. Look at the euro versus the dollar here. Look at the the Japanese yen is selling off, but big trend in there. So we're getting a lot of good action. One stock I've been talking about for subscribers the last couple of weeks has been this HGSI. We've been watching this thing hold above the 10 and 20 day moving average. And what I was saying was, last night that it finally had gotten to the point where if we take a look at the volume weighted average price. So if we take a look at the volume weighted average price, here's what we were looking at, and that's what that line is on there. And I just lost my trend tool, so let me try to get that back here. So here we go. We'll take a look at this VWAP line. Let me just clear that off. So what I was talking about was that we had an event in HGSI. The stock gapped up, and then it pulled back to a rising 20-day moving average, and we've been anticipating a buy-in here, and the buyers had really kind of taken control. But what I said was that where we should really get the upward momentum was above this, which is the volume weighted average price since that gap. And you can see I'm drawing it over, and where it had finally gotten above it on a intraday basis here was earlier this week, and then it held the 5-day moving average, and that's where today it broke this little resistance and really took off nicely. It did a great job of holding the volume weighted average price on this pullback in here, and there was a good bounce. But there's opportunities on both sides of the market. I see a lot of people calling tops in names like PANL, in VHC, and in Travel Zoo. And maybe they will be tops, but I think that you have to go back and look again that these big runaway trends, one hard day, I mean, from a trading standpoint, yeah, it's smart to take your profits in there. But I think it's very similar to this one day in DEC, and I remember people calling that the top in that momentum name. And the stock has really held up very well. People have been trying to call a top in Green Mountain Coffee Roasters and Open Market. These stocks are strong stocks. They got big short positions, and they start to come in a little bit, and the shorts, look at that as relief, so they actually provide some support for them. But anyways, I don't see any questions here on Twitter, so I'm going to wrap it up. Hope everyone had a good week, and I will talk to you again next week. Thank you for tuning in.